Wanted to welcome everyone to our first webinar, many to come, I hope. Today, chatting about cottage life, Bonfire. With everything going on in the world today, it's nice to sort of escape to the lake and where things are a little bit more subdued and a little bit more relaxed. So looking forward to the panel that we've got sorted out today. Wanted to introduce them. I've got Jason McDowell from Commonwell Mutual here to chat about anything insurance related. I've got Peter Brustido from Remax Affiliates Boardwalk, Clark and Brustido team to talk about the real estate implications, and Peter Trevisan from TD Bank, who's a mobile mortgage specialist, again, talking about everything as it relates to secondary homes, cottages, seasonal properties, and the implications of financing, anything involved with that, and how you might be able to adjust your things for to finance a cottage. So wanted to let Jason start off, introduce himself, what his role is, and sort of give a little background as to why he's on the panel today.
Sure, thanks, Matt. So like Matt said, my name is Jason McDowell. I'm the business development rep at the Commonwell Mutual. I've been in insurance for 15 plus years, sort of specializing in everything from large commercial risks all the way down to little wee hunt camps in the middle of nowhere. So I think that's why I've been selected for today's panel, was my knowledge with respect to seasonal risks. And the company that I work for, which is Ontario's largest farm mutual, also specializes in rural risks and cottages. And so brought some of my expert level knowledge to today's panel.
Awesome. Thanks, Jay. Thanks for being here. Peter Brustido, how about we give you the floor for a couple of minutes to introduce yourself.
That was great. Thanks for having me. Yeah, my name is Peter Brustido. I've been in real estate for about 10 years, broker of record for Remax Affiliates Boardwalk. I grew up in the Rideau Lakes area on Big Rideau Lake. I'm a 5th generation Islander, so grew up all of my summers pretty much driving a boat instead of a car. So know waterfront intimately. And then once I got into selling real estate, personally realized that the sort of cottage market was wholly underserved. So I felt. So sort of started to focus my attention on, what waterfront buyers and sellers might need. As probably everyone's aware, that has skyrocketed in the last a little while. It's becoming, on everybody's mind. So I'm really happy to chat with everybody about the ins and outs of it.
Awesome. Thanks for being here. And then finally, Peter Trevisan, same thing. Can you introduce yourself to everyone here?
Yeah, thanks a lot, Matt. Special shout out to all the Peter Trevisans that joined us today. It looks like I sent the wrong link out to a few of you. Again, I've been working for TD Bank as a mobile mortgage specialist going on about 7 years now. And so, my specialties are kind of in all things real estate finance related, whether that's your main property, your second home, your cottage. And we're going to kind of cover a bit of everything today, because there are some ways that we can get creative when it comes to setting up your financing to help you buy a cottage. So yeah, we'll kind of start there. And like I say, we've been talking about cottage financing a lot more over the last year or so here, as it's become, like Peter said, a whole lot more popular, and people are looking for a home away from home and a way to escape the city. So really looking forward to going through the ins and outs of financing a cottage with you guys today.
Awesome. Thank you. So just sort of it's a recap for all of us on the panel, I guess, if you will. But for everyone who's watching at home, just going to open the floor. It's going to be very conversational. Hopefully not too much of a sales pitch by any stretch of the imagination, but more just sort of talking about the current realities of the marketplace and how everyone on the panel sees things going right now. On that note, I wanted to sort of start it off with a timely article that was in a local newspaper this week with regards to the real estate market. Obviously, that's top of mind for everyone right now, with prices of houses going up, the market availability being so little. That's carrying over into seasonal properties as well. And I think, Peter, you'd be able to chat about that a little bit and sort of tell us what you're seeing out there in the marketplace right now.
Yeah, thanks. So we saw this start last summer, really, when it seemed like everybody wanted to escape the city. And, we saw it in cottage rentals, cottage sales, but there was this massive amount of buyers out there, but there was no inventory. Nobody wanted to put their cottage on the market. Whereas, in years past, you'd have, you could spend a couple weekends and go out and see a bunch of different lakes and different types of cottages and sort of in different price ranges and decide sort of what is right for you. Where now in the market I've never seen inventory levels at this low before. And so you really have to have a clear picture of what you want to buy and have a really good plan forward to when that property comes up. What are you going to do and how are you going to acquire it? And how can you put yourself in the best position to make those sort of quick decisions when you might only get 30 minutes or an hour at this property to decide what you want to do and can you have all your questions answered. So that's where the struggle is for buyers, is how do I safely purchase a property in such a competitive market in maybe an area that they're not really familiar with, right? This isn't a townhome in Canada, it's on a lake somewhere and who knows where. So I don't see inventory levels starting to rise anytime shortly. I mean, we're seeing a little bit start to trickle onto the market now, but I think that we're going to be in this for some time yet.
What are some of the things that you're advising clients to sort of have on their wish list, or at least be conscious of before they're getting into the market the way it is right now?
I think the most important thing is to be realistic about what your wants and needs are when it comes to buying a cottage, right? Everybody wants that dream scenario of 30 feet deep off the dock and, privacy and plus an easy road access and all of these things, where that's probably just not the reality. You need to figure out, what are you going to be using your cottage for the most? Is it going to be boating? Is it going to be, just a weekend recluse? Is it kayaking? Is it big boating? And finding those things that really matter to you in buying a cottage, and then having a local professional that knows that body of water and knows that lake, who will call you when it comes up and say, hey, these things that you were looking for, this one has, 4 out of 5 of them. We should go have a look at it now.
Okay, fair enough. Are you seeing that sellers are maybe holding back where they didn't want to hold on to that property, or maybe they're holding off on unloading those pieces of property right now?
That's a good question. Right now, I think time will tell. So we're still very early in this seller's market for cottage country. So, I think that there's some sellers out there that are going to say, hey, this is a prime opportunity. I was thinking about offloading my waterfront property in the next coming years. So why don't I do it now, because the market is super hot? And I think that we're going to see that coming down the pipe. But there's some people that, there's nothing else to do right now. Well, I guess you're not supposed to go to your cottage, but there's nothing else to do but go to the cottage if that's what you have one. So nobody's really willing to part with it right now.
Yep, that's fair. Peter T, you must see a lot of this, especially as people get into bidding wars. What are you seeing from a finance standpoint? How are you seeing clients adjust, especially when prices, for lack of a better term, have doubled in Big Rideau Lake area? You're seeing it all across. I think I did a search. A friend of mine was doing a search, and there was no cottage or no seasonal property available from here until the Muskokas for under $500,000.
Yeah, it's crazy. I mean, when we get into a super competitive market like this, to Peter's point, it's just making sure that you set expectations with your clients and making sure that we have preparation at the front of the conversation, right? So, let's talk about what your budget's going to look like, and let's talk about what type of cottage you're going to look for. In the bank's eyes, a cottage and a second home are two totally different things, but what you and I might call a cottage, we might actually be able to define as a second home, right? So, things like Peter had alluded to before in terms of year-round road access. We also look for things like, we want to have 4-season capability with the cottage as well, in terms of a permanent heat source and, insulated pipes and all that kind of stuff, where you can keep the plumbing running year round. And we need to kind of establish early on if you're going to be looking for that type of place, or you're going to be looking for, more of a year round access type of property, because that's going to change what you need to have in terms of a down payment, right? If you're looking at buying a true cottage that's not ready for 4 seasons and it might not have year-round road access, you need to put down minimum 10%, but anything all the way up into a 50% loan to value is going to need to be insured by one of our default insurers. So either CMHC or Genworth or Canada Guarantee. So, you're going to have to go through another step of approval. So not only does the bank have to approve of that property, but so does the default insurer. And of course, along with that comes a default insurance premium on your mortgage, right? So, really establishing what type of property you want to shop for early on is helpful. If you're going to be looking at more of the second home type of property where you could use that cottage year round, once we start looking at second home, you can put down as little as 5%, right? You're still going to have CMHC involved up to the 20% down payment mark. But if you're doing just 20% down, then all you have to deal with is just, yourself and the bank, being me, right? So that simplifies things a lot. And if we can establish that early on, figure out your budget, get you pre-approved, then you're ready to rock. And, then it's just up to, the great real estate agents around like Peter to try and find you that dream property, and then about putting pen to paper after that. So, yeah.
Okay. Jay, that sort of leads me into the question. Peter talked about a little bit of a difference between a secondary home versus seasonal property. What does that mean from an insurance perspective?
Sure. So I guess sort of the defining line there is how often are you going to see it? So a cottage, like from an insurance perspective, we understand you're maybe going 3 months of the year, 6 months if you're lucky. Whereas a secondary residence is, you work downtown Ottawa. So you have a condo downtown where you live, 5 days a week, and then your primary residence is maybe, in Kingston or something like that. And that's where you go on weekends. So seasonal or cottage means, occupied at least once every 60 days. And then a secondary home that's literally your second home, and you're there at least a couple times a week.
That's fair. What are the implications from a coverage standpoint? Are there severe limitations that can be applied on a policy if the difference is a secondary versus a seasonal?
For sure. So you start looking at things like vandalism or something like that. Some kids come and spray paint your cottage or something. That's a lot more likely when you're not there as often versus a secondary residence. And again, something like a fire or something like that, if you're not in the residence fairly regularly, then how can you monitor whether your pipes are going to burst in the wintertime or something like that? So there's definitely there's definitely implications on between the seasonal and a secondary.
You talked about a fire access, and I know Peter Brustido brought that up as well. Can you talk a little bit, Jay, about what implications having a house being protected, semi-protected, or even unprotected means from what people should be looking for from their insurance carrier?
Sure. So if I'm a client and I'm looking for insurance, it's going to be a lot easier for me to find competitive pricing and someone willing to write my business if I'm closer to a fire hall. And that, it's simple common sense. It's the closer you are to a fire hall, the faster the response time is, and the less damage that could occur. So if I have a hunt camp in sort of in the middle of nowhere up north somewhere, it's going to be a lot harder to find comprehensive coverage for something like that versus Big Rito, which I know is fairly close to a fire hall and good response time there. So from an insurance company's perspective, I'm going to want to write that risk that's close to that fire hall and minimize my risk versus a hunt camp in the middle of nowhere. We'll certainly take a look at both, but the guy on Big Rito is getting a better price, that's for sure.
Fair enough.
Yeah.
You talked a little bit about the different down payment pieces that people could have from for their cottage. With house prices and values going up in the city, are there other ways that people can access capital to maybe move a little bit faster, so that when that prime piece comes up or anything like that, that they can sort of do to get a head start, or do they have to go with a conventional mortgage?
Matt, I'm so glad you asked. So the way that property prices have been growing, especially in the Ottawa area, I mean, it's crazy. You know, you bought a place for 600 grand 2 years ago, and that same place today is worth 850, right? So, you know, we've got tons of people who are sitting on lots of equity, and we've got lots of different ways that we can help you get creative to put that to use. So, you know, one way that we can look at getting you set up to have your finances in order to buy something like a cottage, let's look at setting up a line of credit on your primary residence. You know, you're going to have access to up to 80% of the appraised value of that place, minus whatever your mortgage balance is. And once you're approved to borrow that cash, you can turn around and use it for whatever you want. So, you know, if you're in a situation where you've got a chunk of equity in your primary residence and you're thinking about potentially looking at cottage options, that's a great conversation to start with, because once we've got it set up, it doesn't cost you a dime to have a home equity line of credit available and to give yourself access to that capital until you actually need to start using that money, right? So that's a big part of the preparation piece. Whether you're able to take out enough equity to buy the cottage entirely, that's fantastic. That's obviously, you know, dream scenario. But if you can't, then at least that's a good piece that you can use to help with the down payment. You know, we talked about before on a true cottage, you'd like to get to 50% down payment. That's going to eliminate the need to have any of the default insurers involved, right? So maybe if you don't have that money lying around in your bank account, then we can look at refinancing your primary residence to get you to that 50% down payment threshold. And then make sure that you're able to have a nice manageable mortgage that's easy to approve and doesn't have to go through too many extra hoops. So yeah, leveraging the equity that you've got in your primary residence is an awesome way to go. And we've got, you know, the way that the market's gone the last couple of years, we've got tons and tons of opportunities like that sitting around these days.
Peter B, do you see on your side of things, or do you have any concern with people doing something along those lines? I mean, interest rates are at historically low levels. The Bank of Canada has already indicated that there's probably going to be increases. Inflation over the next couple of years, if it's anything like the roaring 20s of 100 years ago, then there's going to be a lot of people in a world of hurt potentially. Does that concern you at all? Do you see that at all?
For me, I mean, I look at it as affordability for people. At the end of the day, nobody can predict what the market is. So, you know, if you're going to do something like a refi on your house in order to buy that dream cottage that you're going to use and love for years on end, if at the end of the day it's affordable to you on a month-to-month basis, then to me it's a smart move. If you're putting yourself, you know, 2 payments away from insolvency, not a good plan, right? But at the end of the day, you know, the cottage market can be a volatile market, and it always has been. It goes up and down often. So, you know, but then again, we haven't seen Muskokas have that kind of ride, and we've never seen inventory levels at this type of low on Big Rideau Lake. I believe that the Rideau Lakes has just been waiting for something like this for people to realize what it's all about. And I predict that the prices are going to stay, if not continue to climb over the next little while.
That have a lot to do with the proximity to Ottawa and even down along the 401 with stability of income and people just wanting to escape the city.
Yeah, and for people coming from Kingston, people from Toronto who, you know, they have to drive on drive north on the 400 to get to Muskoka. It's 4 or 5 hours in traffic to get there. But if you're on the east side of Toronto, you can get to Big Rideau Lake in 3 hours. And it's basically a straight drive. So we're seeing a lot of people coming from Toronto, finding the Rideau Lakes. Historically, we have a lot of American buyers as well. They haven't been able to come up. They also haven't been able to sell their properties because they haven't been up to service them. So that's a big unknown as well as far as inventory goes. If the border does open back up, you know, what are all of the American owners going to decide that they want to, you know, liquidate their property when they see the price, how much the prices have risen. So,
okay. Jay, we were talking about lines of credit, mortgages. Some people might be inclined to get different lines or mortgages. How does that imply in an insurance policy? You know, if you've got a second mortgage or even private lending to be able to do something along these lines?
Sure. So the biggest factor is actually probably the mortgagee itself. So if the mortgagee wants to be listed, as an additional insured on the policy to ensure that their butt's covered, then you do that. But for the most part, lines of credit, it's sort of separate from a mortgagee and would not be required to be listed on there. As far as the Commonwell goes, we'll easily allow two mortgagees on there. If three start getting added onto a policy, maybe there's a few extra questions, but we're a farm mutual, and it's pretty common for farmers to have multiple mortgagees on a residence. So we're very comfortable with that, and it doesn't generate, to be honest, an enormous amount of questions. So no concerns here. Question for Peter B, though. With respect to, you said that the Muskokas have never really seen a dip. Are you expecting Big Rito to become Muskoka East?
I've been sort of talking about that for a little while. How, you look at a place like Big Rito in general, you've got 3 full service marinas, you've got 2 restaurants that you can boat to. You have a really active lake life there, really good cottage association. I've been surprised actually that it's taken this long for something like Big Rito and Upper Rito to really take off, and for people to realize that, hey, it's actually commutable to Ottawa if you want to. And you could live year round if you'd like, but it also has that classic sort of Canadiana cottage country that you'd expect, the cottages built in like the 1920s and that kind of stuff. So it's got like beautiful vistas. And so it doesn't surprise me that it's finally caught up, but it took a little longer than I'd expected.
And with the new work from home norm, and Elon Musk is solving rural internet for us, do you expect to see more folks sell their Ottawa home and then move up to Big Rito permanently?
Well, I've seen 3 people of my clients already do it this year.
Oh, wow. Okay.
I think that it's something that, people, a lot of the cottages on, and it doesn't have to just be Big Rito. It can be all of the lakes surrounding Big Rito. Big Rito is the most expensive if you're looking for a cottage and you don't have that $1 million budget. There's other places you could look. But we're seeing people, maybe they pull money out of their home line and they renovate their cottage into a 4-season so that then they can sell their house and move to the lake full time. Right. So we're starting to see that sort of exodus, and definitely like the township of Rito Lakes and Lanark Tay Valley, they're seeing an increase in that kind of thing as well.
Peter, you talked about sort of the other areas. Are you finding that maybe people, especially from Ottawa, who like the Big Rito, like that area, maybe now with an influx of people from Kingston or Toronto who got outpriced necessarily from the Muskokas, would you say that there might be a little bit more renewed interest on the Quebec side? And does that have any implications, obviously from your standpoint, licensing wise, but then Peter T, from a mortgage standpoint, does that make any difference?
From a real estate perspective, being in Ottawa, Quebec can be a great spot to look. They've got beautiful lakes. Some of them aren't quite as serviced as some of the ones in Ontario. They're a little more remote. Some people love that, and that's great. You'd want to make sure that you've got a good agent on the Quebec side. There aren't many agents that are duly licensed in Ontario and Quebec. I'm not, but it's definitely an option for many, many buyers if they're looking for that little piece of cottage.
Yeah, and from a mortgage perspective, we don't really discriminate, I guess, but by province to province. The mortgage lending rules are the same. I think to Peter's point about some of those rural cottages being a little less serviceable, the question of, does a year-round road exist? Is it serviceable by city services and things like that? Those questions start to come up more. So that's going to lead you more to if you don't have a 50% down payment, dealing with the insurer and having to get their approval as well, right? So I know it's a crazy market, but I mean, if you're looking at a place like that, there's no better way to protect yourself than having a condition of financing in your offer. And I know real estate agents cringe at that word these days, and that's a really tough thing to have to put in an offer. But if you really don't have your ducks in a row and you really don't have cash to throw down on a place to say that, I'm committed to buying this one way or the other, that's something that you got to look into, because it's the best way to protect yourself. And in a case where you're buying something that is a true cottage, you want to make sure that you got your butt covered one way or the other. So yeah, that'd be my best advice when it comes to buying something that's super rural, whether it's Quebec or Ontario. But yeah, province to province, we're able to keep all the lending guidelines pretty well the same.
I'm going to sort of shift gears here a little bit into sort of the must-have piece. Obviously, this applies to all three of you, but I'll start with you, Peter B, in terms of the differences maybe if people are looking for a cottage that have a boathouse or a bunkie, garage, or other structures on the property. How available is that? Is it realistic? What should people be looking at from a setback or a bylaw, or even lake specific rules within different townships? Is that a big red flag for a lot of people?
A lot of waterfront properties have bunkies already in place. Any new structure, rule of thumb is it's going to need to be 30 meters back from the water, about 100 feet. The workaround for that is if there's already an existing structure, you are typically allowed to renovate and rebuild as it sits. The places where you need to be very careful, most of these are just on footing. So if you decide, hey, I'm going to take this bunkie down that's right by the water and I'm going to rebuild it, and you remove all of the footings all at once, that structure is now gone. And you can't technically put it back where it's sat. You now have to go through all of the new setback requirements and set it back 30 feet or 30 meters when you get your permit. So I would say, boathouses are not easy to come by. Like if there's a property that has an existing boathouse, no matter how ugly or defunct it may be, it's going to be a selling feature for a buyer, because they can then rebuild it as it sits and probably get approval from the township for maybe a minor variance to make it a little wider, because the old boathouses were quite small. Because at the end of the day, with the township, a place like Big Rideau, you've got the township, the Rideau Valley Conservation Authority, and you have the Government of Canada, the federal government, that all regulate that waterway. So anything to do with the shoreline and the waterfront, you need to be very careful before you make any changes to it. But if you've got existing structure there, especially if you're making it better, you're typically allowed to. Now, cost to do things on the lake, budget heavily for any remodeling and renovation that you want to do, especially waterside, because it's not cheap.
Jay, I'm starting to come over to you, and it's along the same lines. Everyone knows you got to insure your, especially when you have a mortgage, you've got to insure your cottage. How does it work with bunkies or boathouses or any additional structures? And then also maybe even a bylaw coverage from a seasonal property standpoint, how that implies things.
For sure. So the biggest, if I could give a tip, the biggest tip is to be upfront and honest with your insurance broker right off the hop. So you think about things like your dock, your shed, bunk houses, boat houses, all of that sort of falls under the umbrella of detached private structure, which makes up a part of your insurance policy. And I know a lot of people, they start thinking, oh, that shed, it cost me $500 to rebuild at Home Depot, or, oh, this, there's maybe $1,000 worth of materials. Go through an evaluator with your broker. Just make sure your limits are adequate on your insurance policy, so that, God forbid, you do have a fire or something like that, you get put back in that same spot that you were prior. So, yeah, just be upfront and honest and realistic about what your limits will be, especially given, everybody jokes about lumber these days and the cost of rebuilding. That's something you really got to look at hard, just because a piece of lumber is like worth its weight in gold these days. So it might be the limits you have now might not be adequate moving forward.
And Peter T, over to you with more around the boathouses. You can go through the Muskokers or Big Rideaus and see these massive, beautiful boathouses or additional structures. How does that affect you guys from an appraisal standpoint and actually finding the value of what the banks will allow?
Yeah, it's a great question, especially with the fact that you're seeing these bidding wars, you're seeing prices jump to a point where we've never seen them before, right? And typically, our guidelines will say that we're going to give the appraised value of the main dwelling plus 5 acres. We don't usually consider the value of bunkies, of boathouses, of things like that, right? Obviously, there's exceptions to these rules when you see these, these magnificent boathouses in Muskokas and on the Big Rideau. They're places where people can sleep, and they're a little bit more serviceable than your just traditional hut with a couple of beds in it, like we would normally see as a bunkie. So yeah, that's definitely something where, again, a condition of financing could save your butt. Because if you're paying a price for something, the bank might not actually come in and appraise it at said purchase price, because you're paying for the bunkies and the boathouses and everything, but we're giving you the value of the main dwelling plus 5 acres, right? So that's something that you do have to be careful with as well. And again, like I say, condition of financing can save your butt when it comes to that type of thing. Because if you see the value come in, let's say you paid 600,000 for it, and we only appraise it to be worth 500,000. If we committed to giving you a mortgage at 80% loan to value, we're going to give you a mortgage at 80% loan to value of what we appraise it to be worth. So that is something that you either have to have, a condition of finance to give yourself an out if you can't afford that extra money, or you're going to have to be prepared to shell out the extra cash to make up for the difference in value that's been calculated by the bank.
Okay, and I think I know the answer to this question, but can you finance or put a mortgage on vacant land?
You cannot, no. So we need to have at least plans in place to put something on that vacant land. You need to own that land free and clear. And then we have we have a product, we have a plan in place for a construction draw mortgage, where, provided you're able to come up with about 35 to 50% of the cost of the build up front, we'll give you a mortgage for up to 80% of what the build costs. But you got to have that extra cash on hand in case of overruns and extra expenses and things like that.
Yeah, that's what I thought. That can be a hefty price tag for people right off the hop.
Yeah.
Switching gears a little bit on the same thing, obviously, Airbnbs, investor money, everything from that standpoint is hot topic as well. Can you get a mortgage to just use your cottage as a rental? I don't want to go to Muskokas or Big Rideau, but I know I could rent it out for a lot. How does that work from your end?
As long as you qualify to hold that mortgage and to pay that mortgage as though you're living in that property, what you do after you own that property is up to you. We can't use any hypothetical rental income, Airbnb income, or anything like that to help stretch your budget, to help you get approved for extra cash. So if you're going to be approved for a mortgage for, second home or cottage, you need to be able to hold that entire mortgage and afford that entire mortgage using your personal income.
Okay, Jay, over to you. There are obviously some implications from an insurance standpoint with Airbnb rentals. Maybe some of the highlights or high level overviews to say how that would affect a policyholder.
Sure. So with respect to the Commonweal, we allow up to 8 weeks of 8 weeks per year of rental, whether it be Airbnb or Kijiji or whatever you use to find that renter. We have a couple caveats in that, you'd have to inspect your cottage both just before and then after that renter leaves, just to make sure there was no damage or anything like that. But no, we're certainly open to it within that 8-week window. Anything outside of that, unfortunately, no, that's a hard pass for us.
Are there, and I mean, that's fairly different from a lot of insurance, a lot of carriers. Are there any limitations to coverage? If I'm going up there with a bunch of buddies and the place is trash, is vandalism the same limits, or any limitations on coverage in a lot of those situations?
Excellent question, and to be honest, that is sort of the big caveat, is that while your cottage is rented, vandalism or theft by that renter will not be covered. So make sure that the folks you're renting to are, either them or they're of good character, because you don't want to be on the hook for anything like that.
Yeah, fair enough. And then over to you, Peter, on the same sort of side with the rentals. Are you seeing an influx of people just looking for an investment property who can churn a rental income on a weekly basis or a seasonal basis?
Yeah, it's definitely a huge segment of the market for some people. There's some places on Big Rideau where you're going to get, between $4,000 and $5,000 a week probably minimum to rent that place out. And if you go on the shoulder seasons from, May 24th to end of June, and then again from September to Thanksgiving, you might get a little less, but you can basically pay for probably most of your mortgage payments and your property tax and maintenance just by renting it out for those 8 weeks that Jay was talking about, and still have the prime summer weeks for yourself. There's not enough rentals in the area. They're booked up sometimes years in advance.
No kidding.
So, yeah.
Jay, we have a question in from the crowd. Does
Right.
Commonwell insure cottages in Quebec?
Unfortunately, we do not. So I thought this one might come up today. No, unfortunately, we are an Ontario mutual, and I emphasize the Ontario. So no, that's a pass for us.
I'll answer this one on Jay's behalf. The implications from the difference in the regulations, Ontario to Quebec, are fairly substantial from an insurance perspective. And I'll throw in our shameless plug here right now. We are licensed across the country, and we do have many insurance carriers who are able to insure cottages in Quebec, whether your primary is in Ontario or not. So that's absolutely something we can look at. Commonwealth does not do that, but they can absolutely do the primary and everything else in Ontario if it so chose. Couple more questions here before we start opening it up for the Q&A if we have anything. One thing I wanted that we've talked about sort of in a roundabout way from that applies very differently for each one of your segments is the concept of value. Peter, you can talk about market value, Jay, ITV, and Peter T to an appraisal value. Maybe I'll start with you, Peter B, in terms of just value from a market standpoint and how you sort of assess it, and maybe from a seller's perspective as to how you price something, bidding wars aside.
Right, that's a good question. There's a lot of different factors when we go into appraise. I'll start from the seller side. When we go into appraise a waterfront property, first and foremost is going to be the water quality. What size of boat could you get in the dock? Is it 20 feet deep? Is it weedy? What's the sun exposure like? That for a start, and how much water frontage is there? We want to see probably a minimum of 150 feet of frontage to get that sort of privacy. From there, you go back to the cottage itself. So I always start at the waterfront because that's the most important thing. You can always change a cottage or a structure with enough money. You can never change the waterfront as it sits, especially anymore. So from there, you go back and look, sort of like what Peter was saying, is it four season? Does it have a serviceable road? Is there a road association for that private road as well? Garbage pickup, all that kind of stuff. And then, is it a custom built home, or is it a kit home that, that used to get from Beaver Lumber and that kind of stuff? So what's sort of the build quality? Because you're going to get everything from a cottage built from plywood that's on piers to an ICF built, 3,000 square foot mansion. That's just absolutely stunning. So, to put a value on a cottage in today's market is really hard because, I just did one the other week and we put a value on it. I said, you know what, this is exactly what it should go for. And it ended up going, over $200,000 over that. So it's, the value is in the buyer's mind, and with inventory this low, people are willing to, pay an absolute premium just to be on the water. So it's if you're a buyer looking to value a property in whatever specific lake you're looking at, the most important thing is to get somebody that knows that water inside and out, whether it's me or somebody else. If you're looking at Sharbert Lake or the Muskokas or Kawarthas, there's professionals. Don't bring your city agent to the country to try and sell you waterfront. And those, city agent will refer to people like me, even though it's only an hour away, because waterfront might look great right now in the spring, but what's it going to look like in mid-July when the water's gone down and the weeds have come up and you're standing on your dock saying, well, I can't even get my boat in here now because the water's so shallow. So you really need somebody that knows how to protect you when looking for most specifically good quality water, or the type of waterfront that you want.
Fair enough. That's from the buying and selling standpoint, it's very an emotional transaction in a lot of ways. People get hooked on something that they want. Knowing, having gone through it myself with other property purchases and dealing with it on a daily basis, Peter T and Jay, obviously value from your perspective is a completely different metric when it comes to it. Jay, maybe I'll start with you and sort of saying, how do people, how do you explain to people that although they paid $1 million for their place, it's only worth, maybe they're happy that they have to only insure it for $300,000, or maybe on the flip side that, they've got this custom log home that it's really hard to replace. And yeah, they only paid maybe $500,000 for their cottage, but it's $1 million to replace it. How does that work from an insurance perspective?
Sure. So this is one of the biggest, I think, myths or confusion points, I think, when it comes to insurance is folks buy, and maybe this is, a few years back when prices were a little bit less, but somebody thinks they got a great deal on a cottage. I spent $200,000. Why is the building limit on my policy $300,000? And market value has nothing to do with insurance. What an insurance company is looking for is the replacement cost. So the cost it's going to take if that cottage burns down, how much money it's going to take to rebuild that cottage the exact same way that it was before. And so one thing that I always recommend is there's 3 things you're looking for on your insurance policy, or sorry, 3 words you're looking for on your insurance policy, and that's guaranteed replacement cost. If you add that on there, you're golden. So whether it costs $300,000 or costs $3 million to replace, it's the insurance company's job to make sure that building gets put back the way it was, no matter what the value. So you buy a cottage for $1 million and it burns down and costs $2 million to rebuild, you're good, no problem.
Now, with some caveats there, if you withhold information and there's co-insurance clauses, I'll save you on this one, but guarantee replacement costs. Will Commonwell put guarantee replacement costs on secondary and seasonal properties?
So yeah, we will. We have a couple. We've obviously sort of a menu to choose from as far as coverage goes, but on our more comprehensive policy wordings and forms that are I consider our Cadillac product, we'll absolutely add guaranteed replacement costs on there for sure. So no issues.
Peter T, question from the audience: what happens when a property goes over asking by an insane amount from an assessed value perspective? And that sort of leads into the same conversation that we're having here. If I come to you and say, hey, I just bought this place, it's a beautiful place for 1.5 million, and everything in the area is sold for 500,000, how are the banks going to look at that?
So for the most part, and this is probably painting with a wide brush, but for the most part, whatever a buyer is willing to agree to pay for a property is market value. And unless there's something that leads us to believe that that's totally not true for this particular property, and that these people did way overbid, we're generally going to come back at purchase price as our appraised value. There are some certain things, obviously, when it comes to cottages, there's a lot of nuances that make each individual property pretty unique. So, when we start to talk about things like boathouses and bunkies and that type of thing, we can expect that maybe we get a bit of a lower appraised value in those scenarios. But if we're just looking at, one nice big cottage property on an acre or 2 of land, generally what people are going to pay for it is what we're going to come back and appraise it for. So, yeah, that's pretty fair to say. Like I say, what someone's willing to pay is typically market value and kind of sets the bar for the next one. So usually we're pretty comfortable coming back right at purchase price.
Okay, fair enough. Peter B and Jay, this one's probably from you guys' standpoint. Peter, maybe from an advice standpoint for clients who are looking to rent out their place, what sort of advice do you give them in terms of having tenants there? And I'm thinking specifically, Jay, this sort of gives you a couple of seconds to think about it. Specifically as it relates to water and the potential liability there, what advice you give them from, if they're renting out their cottage with their boat or any of the toys that may go with it, an ATV, a dirt bike, whatever the case may be?
Yeah, well, that's a really good question. And I think that my initial response to clients would be just don't include those things in your rental. If they want to rent a boat, for their vacation, there's marinas that have coverage themselves, and that will rent them those pontoon boats or the fishing boat or whatever it might be. And that's always your best bet as far as I'm concerned, to do. Listen, Mr. and Mrs. Renter, if you're not going to bring your own boat and you'd like one, here's the name of the 3 marinas. Why don't you rent a boat from them? They have the proper insurance for it. Now, Jay might be able to touch on that a little differently, but water toys, to be honest, other than a swimming raft, I'd do the same thing. I don't think that it'd be worth the risk unless you're an island property, in which case you have to give them a boat to get there. Then, I wouldn't.
As the insurance broker on the panel, I think that's sound advice, especially with unknowns under the water. And that's a big thing that people always forget. There's a lot of lakes, doesn't matter how big or how small, that you just don't know what lives or is underneath the water from a rock perspective, sand shoals, anything along those lines. I've seen too many situations where someone's gone onto an unknown body of water and they've taken out the foot of a motor or the bottom of a boat, or even thrown passengers from the boat itself because they just don't know how to operate a boat. So maybe Jay, over to you in terms of the liability associated with boats, and from a policyholder standpoint, if those boats are covered, should they be getting separate policies from boat specific carriers, how the toys are all sort of encompassed in a policy.
Sure. So like so many other things in insurance, it's only if it's this and only. So what I'll speak to is our Cadillac product. I mentioned that a little bit before, but we do sort of include a base liability for watercraft, provided they're under 25 horsepower. And so similar to Peter B's answer, my response to somebody looking to rent out their cottage: don't give access to those renters. Let them go out and get their own policy, get their own rent a boat from a marina. Just cover your butt. But like I said, our Cadillac product does provide coverage for those smaller boats as part of the package, as long as they're under 25 horsepower. Now, anything above that, you need a separate, we call it an admiral policy, but a separate marine policy, and Matt would be able to help you out with that.
Perfect. Another question from the audience: what's your experience with fractional ownership? And I'll start with Peter B, and then sort of go around. We've seen that where there's a lot of groups of people coming in and looking at buying a cottage to split amongst themselves.
Yeah, there's a couple of options for fractional ownership in sort of the Rideau Lakes area. I haven't sold any. I'm not that familiar with them. They are basically, you get a certain amount of weeks in the prime season, certain amount of weeks in the shoulder season, and in the winter season. I think that there's one, I believe it's called the Wolf Springs Resort near Westport, that is that's available and usually all for sale, and typically under $100,000. I don't know how it works from a finance perspective, but it was a trend that tried to start in the area, and then it never really took off.
Fair enough. Peter T, maybe you can address the finance piece.
Yeah, so that's kind of more like almost like a timeshare type of arrangement, eh? Yeah, so that's a no-go from our standpoint. I mean, we're not going to be, if it's 2 couples and they want to go in and buy a property together and they want to split up who gets what months, by all means, we'll go ahead and we'll evaluate your ability to carry that mortgage with all of your incomes. We can have up to 4 people on the mortgage, and as long as all the numbers work, you're off to the races. But when it comes to that timeshare type of arrangement, unfortunately, the bank doesn't do any of that. That's a great situation where we can look into, home equity line of credit on your primary residence, give you access to the money to be able to do something like that. But we're not going to be the ones to put a lien on an 1/8 of a property. We just don't do that, unfortunately. Yeah.
Yeah, I would think in a lot of situations there's buy-in programs or initiation costs and sort of a continuous payment that's coming from the organizer of that that timeshare, if you will. So yeah. Now you mentioned having up to 4 people on the mortgage. Does that multiply your ability to have a larger property potentially, or a larger ability to carry that?
Yeah, potentially. I mean, obviously, the more income that you have on a file, the more debt that's serviceable. That being said, if myself and Matt and Peter and Jason are all going to buy a cottage together, not only do we get to include all of our incomes, but we're also including all of our debts, right? So all of our car loans, all of our, potentially people still have student loans, all of our mortgages, everything else that we have has to roll into that picture as well, and we have to still basically go by the same debt servicing guidelines that we do with every other mortgage that we approve. But yeah, in theory, having four people is not an issue. They don't need to be related as long as the numbers work. Like I say, you're good to go.
Yeah, I know that's going to throw you guys for a loop.
Yeah, we're certainly not looking to write insurance policies for any timeshares. So that's a hard no for us. But with respect to, a couple coming together and or two couples coming together and wanting to purchase a cottage together, we could certainly take a look at that. No concerns there. My only, I guess, caution piece would be make sure it's somebody you know and trust, because in the event of a claim, all four names are going to be on that check, and you want to make sure everybody's on the up and up. But yeah, no.
Jay, I have a question for you actually. If we were to do this, all the four of us together, would it
Are we
be
doing this?
Well, we might.
Are we doing this, guys?
I want to know first, from an insurance standpoint, would it be better for us to be doing that personally, the four of us, or better for us to have a holding company that we incorporate under and then buy the property that way? Because from a mortgage standpoint, it's doable either way. But I want to know from an insurance standpoint, like if the four of us were to just do a holding company, how would that look on an insurance?
No effect in either way. No.
Okay, that's good.
Would you flip it into a commercial, more of a commercial type risk, Jay, or is it still a personal side of things?
So I'll be honest with you. When it comes to seasonal risks, we're not super keen on companies owning or being the named insured on there, only because then, what's the operation at that point? Is it strictly a rental or something like that? But if it was strictly the four of us just came together and made this entity just because we're buying a spot on Big Rito, I think, Peter B, then no issues here. No.
Okay, perfect. I figured as much, but that's important to know. Last question before we wrap this up, because I know we're getting close to an hour here, but what happens when the cottages that I want to buy is on leased land?
Sorry about that.
Jay, go ahead.
Sure. Yeah. So we actually have an endorsement we can add to any policy that's a life lease endorsement. So it would allow you to continue that and would add the leasing company onto the policy too, or the lessor onto the policy if so required. So yeah, no issues from an insurance standpoint with respect to the Commonwealth. That's for sure.
Peter T, any red flags with a leased land piece, or someone putting something up on or buying a cottage on a leased land? I'm thinking Crown lands probably, or Indigenous lands.
Yeah, that's a no-go from a cottage mortgage perspective. That's another one of those great scenarios where let's take a look and see if we can get creative another way to still get you the money that you need to buy this place, because we're not going to be able to put a traditional mortgage on a cottage that's not on land that you already own.
Peter B, anything to add on a leased land perspective?
Yeah, we've actually done a couple of these, and they can be incredibly difficult because there's a lot of things that you need to think about. Number one, the mortgage aspect. You basically have to have cash in order to do it. How long is the lease on the land, right? If it's Crown land, you might have a 99-year lease, but we've done one that we were trying to sell. It only had 5 years left on the land lease, and the current landowner was only willing to extend for another 10 years. So now you're looking at a cottage where your maximum guaranteed is only 15 years. So if the prices for land leases are much less. So I tell people, if you're thinking about it that way and you've got the cash, then you need to think about it like sort of buying a motor home, a depreciating asset almost. You're going to get the enjoyment out of it for 10 years or so. But we can't guarantee that after that's up, that you're going to have a really viable sellable asset at the end.
Fair enough. Jay, I got one last question that we're going to squeeze in here. What about security concerns when you're not at the cottage? What should cottage owners look to do as prudent homeowners to make sure their cottages are secure when they're not there?
So ideally, blue sky, you have a property management firm or a neighbor or something that's regularly checking in on your cottage. Bare minimum, go up. Like I said, Commonwell's requirements are once every 60 days on our most comprehensive form, and then that date gets pushed back 90 days every other couple months, depending on the coverage on your policy. So if it's just a basic fire policy, all we're covering is fire, shoot, you can go up there once every 6 months. We don't care. But if this is something with some higher values, a nicer cottage on that Cadillac coverage form that I'd mentioned, then yeah, once every 60 days, somebody's got to come and check and make sure the pipes haven't burst and the roof's not on fire.
Awesome. What about less security necessarily, but again, prudent homeowner, heat and water within a cottage, especially from a seasonal standpoint?
Sure. So there's a couple options there. I think more often than not, cottages usually have a wood stove. So as part of our due diligence when insuring a cottage, is we send an inspector out to go either visit that wood stove, make sure it's wet certified, take a couple photos, or in the instance of oil heat, same thing, send an inspector out, go check on the oil tank, make sure the gauges are up to code and things like that. So we do have inspectors that go out and view those type of things. Yeah, did that answer your question?
Yep. No, absolutely. Well, I think we've covered a lot of things. I think we've given a lot of information off to the audience. So I want to take the time to thank you guys all for joining us today. Anyone in the audience, I think Kathleen's going to put up contact information in case you want to reach out to any one of these fine gentlemen in terms of being able to reach out if you have further questions. Please feel free to reach out to us, and then we can connect you with the different experts. But thank you very much for joining us, and we'll chat with you soon.
Awesome. Thank you, guys.
That was great.
Thanks for having us.
Yeah.
Yep.
Guys, really appreciate it.
Take care.